Hey everybody, welcome to another episode of What Ted Says, where it's always time to get a fatter wallet and a bigger net worth. The number one question I get is, Ted, how do I hide money in a divorce? Shh. That's not something that you should be doing. So this is not legal advice and it's not financial advice, but I thought I would at least share with you some of my observations of what I've seen over the year, how people have tried to hide assets. I don't know if they all got away with it, but these are the top ones that I see. If you're thinking about hiding money in a divorce, that's gonna be up to you and your conscience. Number one is cryptocurrency. This is probably the biggest area that I'm seeing people hiding money. Now, of course, you can try to trace the bank account in terms of how money got into the cryptocurrency account, but once that money is in the cryptocurrency account, remember, cryptocurrency isn't all money per se. A lot of this are various types of technology. So if I had Bitcoin, for example, I could trade that and I could basically buy digital art, or I could buy digital playing cards from something like NBA Top Shot. So trying to track down those digital trading cards in a wallet that you don't have access to, or it's impossible to get into, or even if they took that cryptocurrency and they ended up putting it onto some sort of hard drive where you may only have 10 tries to get into that ultimate hard drive, can be very, very difficult to trace. Then you think about something like cash. Cash is a big one. Now, you can actually see if cash came out of the bank, if your spouse or partner went down to the bank to cash something out. That is, if in fact you have access to that account. But if it's an individual account and they're taking ATM withdrawals on a regular basis, you could still see it on the statement, but then the question is, how do you actually prove that they still have the cash? They could say, hey, I spent it gambling, or I spent it out entertaining, or I went to a strip club, or I went somewhere and I took that money, or I lent it to a friend and now it's gone, or whatever it may be. I've seen a lot of people over the years, they have tried to take cash and then give it to siblings or parents to hold on to that cash, only to be able to get that cash back. So the bottom line is, you should look for those transactions pre-divorce, and that's something that can be problematic. The third area in here is simply what I would call to be overpayment. Now, one way you could do this is actually overpay your tax bill to the IRS and try to get divorced, and then if the divorce decree isn't written right, that overpayment may come back to you in a future year when you file your taxes. But what happens more is people will overpay services. They might overpay the retainer to the very attorney that you're competing against, only to know that that attorney won't use all that money, and then they'll get some of it back post-divorce. So you should really look to see if there are high dollar payments that are made to a contractor or a service professional or somewhere like that where they overpaid inevitably to try to get that money back. If your spouse or partner owns a business, this is one big one that I've seen over the years about trying to hide money in a divorce, is to make the business look like it's doing bad. Let me paint you a scenario. If you have any kind of business, you have suppliers that you're going to pay. So imagine that the business was doing $200,000 or $300,000 of profit, but your spouse or partner uses the corporate cash to overpay those suppliers. So now they've overpaid the copier person, they've overpaid the postage meter, they've overpaid that supplies company, and when they overpay all of those companies, then they get divorced from you. The business, one, looks like it's doing bad on paper, which could hurt your alimony or hurt your percentage of the business that you might own, but ultimately the following year after divorce, they get all that money back. It's a different form of overpayment, but it's built inside of the business to make the business look like it's doing bad. Pre-spending could be a big one that you have to watch out for, and this means that 12 or 18 months out, they booked an extravagant or lavish trip. I recently saw a divorce here where one spouse or partner was going out and buying cars like crazy, and you can include those cars as part of the divorce, but the value of those cars could be undervalued by one spouse or partner and then resold if you really don't know a lot about the lavish things that they're buying. And this may be some specialties that involve jewelry or coins or stamps or other things where your spouse or partner may say, this is really not worth that much, when in fact they're trying to make a bigger buck down the road. So I'd be very careful about hidden assets that fall into a pre-spending pattern. Those can be very difficult to ultimately figure out the value and track as well. So I'm sure there are other ways that you could ultimately hide money out there. Maybe you've got a friend who's thinking about getting a divorce, or they're going through a divorce, divorce, you might want to forward them this video because it could be the difference between them keeping some of their money or the difference between them getting all of their money. It just depends on knowing where the flow of the money is. This is why sometimes you might hire a forensic financial advisor or a forensic accountant to look through everything, especially if there are a lot of assets and a lot of entities that you're dealing with when you go through a divorce. So leave me a comment on here. Have you ever known anybody to hide money in a divorce? I want to know. Thanks so much for watching this episode of What Ted Says. Please share it with your friends. Click the subscribe button, click the notifications button, get more information so you can do two things. Get a fatter wallet and get a bigger net worth.